Okay, the market had a rally. We've got a government shutdown going on. We've got some really bad economic data today. Market shrugging off of both and forming the diversion scenario that I've been talking about in the daily time frame on the RSI. The Dow was up 0.09%, up 43 points. The Nasdaq was up 0.34%, up 23. The S&P was up to almost 23, up 0.34. Nasdaq up 0.42. Russell up almost a quarter, and the VIX was flat, up 0.06%. The S&P is moving to a new high. The VIX is not moving to a new low. There's that discrepancy, and we have warning signs on the VIX. It's official. We've got a government shutdown. Again, I told you I thought we would end up getting this. Normally, in recent history, these things haven't really impacted the stock market. Other times in history, they have. I think this one can possibly be a catalyst. And I talked about that yesterday. I showed you that CNBC article, and I think that there's a possibility that with the shutdown, that the Trump administration goes forward and maybe eliminates jobs. And I think that there could be some concerns about an already fragile labor market. Whether that is the case or not, I don't know. I'm just throwing this out to you, something I'm paying attention to. Eventually, the two political parties are going to hammer it out. They'll end up getting the clean continuing resolution passed, and they'll go back, fund the government to November 21st so they can finish the 12 appropriation bills that they were working on. That's why the fiscal year for the government expired on October 1st. They needed to get that continuing resolution and passed in the House, but in the Senate, only 3 Democrats went along with the Republicans to pass a clean resolution. They need more Democrats. They need 60 votes to pass it. They didn't have it. Eventually, they'll get it. So how long the government stays closed, we'll see what happens. But does the Trump administration start doging down the government, shrinking the government down to size, firing people, eliminating programs? And if so, how does Wall Street respond to that if that's the case with already a fragile labor market? I have no idea. It's just something I'm paying attention to and watching. So that could impact the stock market. Also, concerns about consumer spending if we start seeing federal workers lose their jobs, or could be concerned about that. So just some things worth paying attention to: consumer spending, the labor market, the government shutdown. How does it impact the dollar and the 10-year Treasury note yield, which is forming that bullish falling wedge? Just some things to be paying attention to with all this. Again, sometimes these things rattle the market, other times they don't. Is this going to be a catalyst? Could be. Some of the things that I've mentioned. The other thing is if we start getting the economic data, does that impact the market? With the government shutdown, supposedly we're not going to be getting the CPI and the jobs report come this Friday. And if we don't get that data, again, the Fed's going to need that data to make a decision later this month. At the end of this month, we have a potential another rate cut on the table. So again, just some things to be aware of. Now, we did get economic data today. Economic data that, again, is very concerning. We got the ADP private payrolls. Now, supposedly, we're not going to get the jobs report on Friday with the government shutdown, but at the private payrolls, and it was expected to be a positive number at 45,000. It came in at negative 32,000. And what's even worse is the previous number at 3,000 was revised down to negative 3,000. The previous reading that we got from last month, this is private payrolls. Today we were supposed to get the Labor Department's data, but if the government is shut down, we were told that that's not going to happen. But this was a positive 54,000 previously last month. Now it's a negative 3,000, and then this month you get another negative number. The concern, and this is another reason for the rally. Oh, okay, we're going now. Now the Fed is going to cut for sure. The risk here, though, if we continue to see deterioration in the labor market, is that you're moving into recession. And again, we already know the recession signals are flashing, and eventually that's why the Fed is going to end up giving us jumbo cuts. And the rate cuts are going to be associated with a bear market, with the stock market, a bear market with Bitcoin. Right now, getting this week data, so it's all the Fed's going to cut, but we don't know what the jobs report is. When if that comes in, it's supposed to be a positive number, It's supposed to be right now. The estimate is better than the previous month. If we eventually get this jobs report released that day, if the government shutdown ends, or at some point in the future, again, if this number comes in better than expected, then it could be that we start seeing the rate cuts taken off the table. It's one and done. I still think that that's a strong possibility. The Fed told us the reason why they cut. Powell at Jackson Hole said, oh, we have this weak GDP. Well, the GDP's improved. We had the strongest, fastest pace of increase for the GDP in 2 years, and it got revised up to 3.8%. If the jobs numbers start improving, then what reason is there for the Fed to cut? And that's all I'm saying. If we start seeing inflation tick up, and again, months ago, I predicted that we would have inflation bottom and begin to rise with the CPI, that the PPI would get a higher low, and that's happened. It continues to move higher. You start seeing inflation rise and strengthen the labor market, strength with the GDP, then again, why would the Fed cut? I personally believe the Fed should be slashing, but I'm telling you, based on their own logic, why would they cut? I talked about a shift in the balance of risks, from inflation to the economic data to the economy. If the economy is showing improvement by the data coming in better, then why does the Fed need to cut? I think they should cut because I believe that a recession's coming, and I think they should be slashing rates right now. The Fed, they don't believe the recession indicators, and they don't believe that we're going to have a recession. They still talk about their soft landing nonsense, which is a fairy tale for gullible people that want to believe it. It's not true. Sometimes they claim we had a soft landing. We were still in an economic expansion. It's a bunch of poppycock. So again, if they reopen the government, maybe we get this report. Maybe it spills over into another week, 2 or 3. If the government stays shut down, we'll be watching. We were told that we're not going to get the jobs report if that ends up being the case. We'll be watching how this comes in. But again, you got the Fed meeting at the end of the month now. They're going to need this data and the CPI data coming in the near future. Please support the channel with the link directly below that allows me to be able to provide you this information. If you could take a moment to do that, I'd appreciate it. Follow the link below to take you to a secured site. You could donate any amount you want to make it a recurring donation. I thank you for your consideration for that. I'm watching the VIX closely. We had a sell-off. The VIX had a surge, and then it pretty much closed flat, getting a black candlestick. It closed flat after we got the rally new highs. The S&P gapped lower, but it got a gap and trap for the session to form the divergence on the RSI in the daily time frame. Here, the VIX warning signs, the tightening of the bands, the MACD, the breakout, the push above the 50 period. We're still above the 50 period. The fact the S&P moved to a new high, and we did not get the VIX moving to a new low. We also had the hollow red candlestick, which is what we had back over here before the February sell-off. So some similarities, but so far the S&P is remaining elevated. As you can see, the S&P right here. When we had this signal the last time, the S&P ended up dropping 21%. The S&P has the new high, the VIX has a higher low, and the VIX had the RSI move back into the positive region, the stochastic turning up. So let me bring it up close because I want you to see, again, we're firming up at the 50 level in the stochastic here, so that's something to be paying attention to. And the MACD is still in positive territory. And again, when this occurs, then you start getting volatility. If the MACD can stay in positive territory, and the VIX, the MACD for the VIX, and the VIX can stay above the 50 moving average, the 50-day moving average, which is the green line, then that's when bad stuff starts happening on the S&P. We've gotten above the 50, we dropped back below it, and we're back above it here for the last 3 days. We had a bullish inside day, but it failed to be confirmed. Didn't do it yesterday, tried to do it at the highs of the session, and then we closed back down, and we closed off of the highs there, getting that black candlestick. So what I'm watching is, does the MACD remain in positive territory? Do we remain above the 50 level? And if we do, then volatility will return if the VIX does start to surge. But so far, we've had a breakout. The S&P didn't do anything. Had just little smaller pullbacks. The MACD's gone positive. Again, smaller pullbacks on the S&P 500. Started to get a little bit of volatility, and then it rebounded to new highs to form a divergence on the RSI. So I'll be watching the 50 period. I'll be watching the MACD. I'll be watching the stochastic as it's turned back up. The stochastic turning back up. Got to be watching to see if the VIX can hold above the 50-day moving average. Can volatility return on the S&P and complete that divergence and begin a sell-off? Right now, the market's shrugging off a government shutdown. It may not do that. Start seeing federal jobs lost, as the Trump administration is suggesting they might do that. So how does the stock market respond to that with an already weakening labor market? So we'll be watching this closely. Could that be a catalyst for the sell-off? Just something worth paying attention to. This government shutdown business. That's why this time could be different. The last several government shutdowns didn't really do anything to the market. We've seen it happen before, but this, in the recent history, it hasn't really had any kind of real impact on the stock market. This could be different, and that's why I showed you that CNBC article yesterday talking about that very thing. There could be concerns about a already weakening labor market and consumer spending if we do, in fact, see federal jobs eliminated if the Trump administration goes that route, which we don't know if they will, but Trump is saying that he might do that. So we'll be watching. And if he does it, does the stock market have any kind of reaction to that with the already weakened labor market? I don't know. Just something I'm paying attention to. It may be a nothing burger. Who knows? But we're watching to see what happens. Also, the 10-year Treasury note yield and the dollar, if they start rising, then markets could have a negative reaction to that. If yields rise, the stock market could go down. They often have a negative correlation. Got a bullish falling wedge here on the 10-year Treasury yield, something worth paying attention to if yields start rising surrounding a government shutdown, just something worth watching. Now, we're watching to see, do we get a lower high or a higher high? If we get the higher high, the divergence comes into play here, which it's now doing on the NASDAQ and the S&P 500. Potential divergence on the stochastic and the RSI, and the MACD never rolled over on the NASDAQ daily chart. And again, you got a potential divergence now on the histogram down here as well, which is the difference between the MACD line and the signal line. We're bouncing off of the 10 period. And if I zoom out here, you can see we're up 100 and almost 121 points today on the NASDAQ. We're up just under 0.5%. And you've got this divergence now at play. We're moving to a new high. You're getting a divergence here on the RSI. You're getting another reference point on the MACD, and you're getting it on the Awesome Oscillator. I told you earlier in the week and over the weekend that if we end up getting green bars, you could get the divergence scenario on the Awesome Oscillator here. You get the divergence on the RSI, but you can see the divergence is developing as the S&P is going up and slamming into the resistance level yet again. Momentum tried to flip to bearish for the NASDAQ in the summer in August there, flipped back to bullish in September, and the signal remains bullish. We're holding above the 10 period at the moment and the 20 period moving average, and you've got this potential divergence. We need to see a turn back down and signals to turn bearish for the divergence to complete. Multiple point divergence on the Awesome Oscillator, just like on the MACD. NASDAQ daily chart right here. You got the same thing going on with the S&P 500. The S&P went up, made a new high, and you got the same similar type of divergence here on the Awesome Oscillator. The MACD had turned down, and now it's turning back up as the histogram moves slightly positive. And again, you've got potential divergences in the most recent price action that won't be done until we start seeing a reversal. Will signal that they're done. A similar divergence down here on the stochastic. Again, price is moving higher. The indicators are not. We had a divergence over here on the stochastic that gave us the pullback to the 20 period moving average, and now a triple divergence developing in the most recent price action on the stochastic. This is the S&P 500 daily chart. I wanted to show you that. I wanted to show you that awesome oscillator on the S&P. Well, I had it up with the Nasdaq, but I want to just go back to the Nasdaq for just a moment. Nasdaq's got those diversions. When it completes, you want to be watching the broadening formation in the daily time frame. And that is the broadening formation with the trend line on the logs, with the log scaling in the daily time frame. This trend line right here, we're coming up to it. We connect these points over here, and we hit it in 2024 in July and during the fourth quarter, and then came up right to it again, started to turn down again, forming this divergence. Again, you're likely going to slam into that trend line here with our log scaling, complete the divergence. I talked about a lower high scenario or a higher high scenario, form the divergence. A lower high would just be we're at an extreme, like when we bottomed with the extreme with the RSI at the bottom here in April. There was no divergence. Now, so you got a good shot that when the NASDAQ tags this trend line, the divergence is likely going to complete. So pay attention, that's just directly overhead. But you could probably get a completed divergence here on the RSI and on the awesome oscillator, the histogram for the MACD, which again I showed up closer a moment ago. S&P 500, same thing. Again, not only on the awesome oscillator, we're moving higher on the S&P, but you got this potential divergence right here on the RSI in the daily time frame. The MACD has turned back up. The histogram has moved into positive territory, so you get this divergence on the MACD. And I'll just extend it over here. You get this larger divergence and one in the most recent price action. Zoom out to look at this divergence. You can see we're coming up towards this trend line right here. This trend line from these previous highs over here and our recent one here. Again, an important trend line to be watching with a multiple point divergence and one here in the most recent price action on the RSI. Multiple point divergence that gave us this. Again, I think you're going to be headed back towards the cloud, towards horizontal support from our February high, towards the 200 period. I think you'll see a bigger correction, but signals still remain bullish, and markets can remain overbought or oversold for an extended period of time. Once this plays out, a bigger sell-off, my guess is it's going to be a higher low. And remember, as we're hitting these resistance levels, we're getting 9 counts this week in the weekly time frame on the NASDAQ and the S&P. We're getting 8 of 9 counts on the Dow and the Russell. Now, the S&P has these longer-term levels as well. We have the 2018 trend line. This is a parallel trend line from this low here and this low here, not touching these other lows. That's a blue trend line you see right there, parallel to that. We're coming up and slamming up into that. Okay. We also have the trend line from the 2023 low right here, excluding this low right here, but connecting this low and connecting this low right here that separated the two peaks. And we're coming up and we've hit that trend line. I'll bring it up close so you can see this is the weekly chart right here. I've marked some of the Fibonacci retracements here. Now, again, this trend line right here is from the 2023 low. This blue trend line up here is from the 2018 high of the first quarter. We're hitting the trend line from the 2018 high. If we overthrow that level, this trend line right here from the 2023 low comes into play directly overhead, and again, completing our divergence. Right now, continue to bounce off of this black trend line right here. That trend line has to break in order to have a pullback. This is going back from the May low, May, June, the early August low there, mid and late August. We tried to break it. We ended up closing right at it, bounced, and then again we hit it last week. We've got price moving into a tighter and tighter range, into a wedge between the black trend line and this blue trend line right here. And again, if we go higher and hit it, you could complete the divergence there and turn down and break this trend line. But if we're to sell off, this black trend line has to break with these longer term trend lines here on the daily chart. On the 60-minute chart, we have another reference point of a divergence. We had the divergence here form, and that gave us the breakdown of the rising wedge pattern. We've now come back up above that level, and you have another reference point. Now, if we go higher, we may form a brand new divergence right here into the 2023 trend line, or if this plays out immediately, we may not reach that trend line and see a reversal. We did drop below the 50 period in the cloud, but then ended up climbing right back above them, moving and now challenging this high, and getting another reference point of a divergence on the RSI down here on the MACD as well. So again, does this play out immediately, or do we form brand new divergences here? We'll see what happens. We had the rally in September. The seasonality is no longer being followed by the S&P 500 at all. Just be aware, as we're forming the divergence on the RSI in the most recent price action, last week we had the candle of indecision in the form of a doji on the S&P and a spinning top on the NASDAQ, and we slammed up into this trend line right here from the 2023 low. Okay, and we hit the trend line from 2018. We're just under that 2023 trend line, and we're hitting the 2018 trend line yet again. As we're doing that, we're getting a 9-count sell signal. Now, it was a 9 count that marked the bottom. Bar 8 was the low of the count. We had a 9 count here, but rather than getting a pullback or reversal, you got an immediate trend extension giving you a reversal pattern, which is a 9-9 signal here in the weekly time frame. A 9-9 is a reversal pattern, but it means nothing unless it gets confirmed. We got to see bars begin to turn down and start a 9 count to the downside by closing below the bar from 4 bars ago. If we close above the bar from 4 bars ago this week, this 9 count will complete, which 1, 2, 3, 4, the bar 5 right here, as long as we close above this level right here, and I was a little high there with that, then the 9 count complete. I told you if the divergence scenario happens with the S&P and NASDAQ, then we can get the 9 counts being the highs of the count this week, and next week we can complete the 9 counts on the Dow and the Russell. The 9 counts, even if we start a sell-off, the 9 counts for the Dow and Russell don't have to be the high of the counts. The 8 bar or 9 bar have to be the high of the count. Here, our 9 count is now the high of the count. Be aware of these 9 counts as we're going up and we're slamming up into the 2018 trend line, as we're slamming up into the 2023 trend line here in the weekly time frame with our linear scaling. Same thing, we got this trend line going back from the 2020 low, the pandemic low, and we're hitting this trend line, slightly overthrowing it. Slightly overthrowing the trend line from the 2020 low with our linear scaling, but if we make the broadening formation, which I showed you already in the video, the log scaling, we're just underneath it. So, and the log scaling on the daily chart makes a really, really nice broadening formation. And you can see that here. Now, every time we've come up and touched this trend line, we've had a major sell-off here, nearly 16%. Over here, nearly 26%. I'm just rounding the numbers. Now, here we are again at this level. It's likely we're going to see a sell-off. Now, if we get a 16% sell-off like what we had over here, you're going back to beyond the 200-period moving average on the NASDAQ. That same time in the summer, with the July sell-off there in 2024, the S&P dropped 10%. Could we be moving back towards those 200-period moving averages? Now, if I zoom in, right at this trend line, we're getting a 9 count, a 9-9 signal as well this week. Here it is with our linear scaling, the broadening formation, and the weekly time frame. Again, we're just slightly overthrowing that level with our log scaling. We hit it, we turned down, and now we're coming up to it with the log scaling. This is the linear trend line from 2020, which we're slightly above. We're slightly overthrowing it from these two highs. But as you can see on this chart in the weekly time frame, we're getting a 9 count. You're getting a 9-9. Same thing. You got a trend extension, and now you're getting another 9. It was a 9 that marked the bottom. It was a 13 that marked the peak after we peaked over here. We got another peak, and then we sold off. We had a 13-9, and we went one higher for 1 week, and then we sold off there in July of 2024. What does this mean? It means that we are very extended. It means that we are very, very overbought, and a correction is way overdue. That's what this means. And it's likely at this trend line, you're going to see something happen with that. We've gone up. I talked about the lower high scenario with our spinning top candlestick in the weekly time frame and our doji candlestick, or a divergence developing going above those levels, getting a divergence on the daily chart with the RSI and the awesome oscillator for NASDAQ and S&P, and then turning. That is likely going to be the scenario. We are talking about both of those scenarios. The divergence scenario is now in play. And I told you we may end up seeing back-to-back reversal bars, but we did have a candle of indecision last week. That would have to be confirmed to act as a reversal bar. We'll be watching to see what kind of candlestick we get by the end of this week. At the divergences, and as they're forming, you're getting this 9-9 signal here in the weekly time frame. NASDAQ weekly chart, S&P has the same thing. The Dow moved up to new highs. It's got bar 8 of 9. The 7 bar is still the high of the count. If the Dow goes higher, bar 8 or 9 is the high of the count, then it will be a perfected signal. Again, it was a 9 count that marked the bottom for the Dow. It was also bar 8 being the low of the count for the Dow. So here we are, bar 8. That bar 8 could be the high for the Dow this week or next week with a 9 count. Just saying, we might get the 9 counts being the highs of the NASDAQ and S&P, and the 8 bars possibly the high for the Dow and the Russell. Dow weekly chart here. Here's the Russell. Now, if the counts don't play out on the Dow and the Russell, we got to close below the bar from 4 weeks ago. If that happens next week or this week or something, then these counts get canceled out. But you've got the 9 counts potentially going to complete this week on the S&P and the NASDAQ. And here on the Russell, we're up to bar 8. Again, just like the Dow, the 7 bar is the high of the count. Over here, again, 8 bar was the low of the count, and you had a 9 count bottom there with the April low. So again, 8 or 9 can be the high of the count. If we close below the bar from 4 weeks ago, then the count gets canceled out. We had the candles of indecision on the Dow and the Russell here. On the Russell, you had a spinning top just like the NASDAQ. In order for this count to complete, we've got to have a new high, bar 8 or 9, either this week or next week here for the Russell weekly chart. And keep your eye on Apple, because Apple's got a 9 count as well. Again, we had a 13 here, and it gave us this sell-off. And you got a 9 count here coming back up and testing that high and moving just above it. You have a potential, or moving right up to just under it, pardon me. You have a potential double top pattern here with a lower high or a higher high. But right now, we're getting a 9 count this week on the Apple weekly chart. We may overthrow it if we try to move to a new high, but you got a possible double top pattern. If the market pulls back, Apple's probably going to just pull back and eventually go to new highs if we turn here or go a little bit higher and turn. And don't forget, we have NVIDIA. We have NVIDIA still flirting with this trend line right here, this long-term trend line. Again, we're likely going to see a reaction, a bigger reaction off of it, and I think eventually you'll end up going back up to it and topping out, completing the broadening formation, and eventually see the ushering in of the bear market once the broadening formation is complete. But again, this trend line, parallel boundary to the lower boundary, all the data that we have on NVIDIA continues to hold as resistance. At our recent high, NVIDIA came, or our prior high, I should say, we came right up to that trend line and turned off of it, just right underneath it by a fraction. We came down, we dropped 11.25%. Now we've come back up here. Again, that trend line directly overhead is major resistance. When we rallied over here and here, we didn't reach it, and we moved to new highs. Did we reach it? Well, there it is. If you reach it, you're stalling at major resistance. If you fail to reach it, like back over here, then again, you could still get a lower high below it, but still we're moving higher with NVIDIA. Now, we do sell off and turn back up. Again, you could complete a massive broadening formation here, but again, we've been around the highs. We've rallied up into the highs, into the trend line, I should say, rallied up to new highs, pull back, and then now here we are again, kind of going sideways in this range right now, but directly overhead you have that trend line, something to be aware of on NVIDIA.